You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim. It's a great day.
Well, it looks like everybody's had their Thanksgiving turkey in the U.S., and they've taken a look at what's going on with their portfolio. I noticed the equity market's down. Gold held its own today. And we're saying it's probably time to get physical gold, and we'll discuss why. First of all, I've heard that China has pretty well snapped up every piece of physical gold it can lay its hands on this year, maybe 90% or more of the world's production this year.
I've heard that figures could be that high for Chinese gold, and of course, we won't know for several months until we see the statistics on what they have purchased in a public venue, but you can be darn sure a lot of it is being purchased under the radar as well. The fact that is almost undeniable is that very, very large quantities of gold and silver are migrating to the east, and they're not going to come back anytime soon, if at all. And once the market really fully realizes this, the sell-off that we saw yesterday, where gold was down about $25 and silver was down about 85 cents, is going to be a memory. And I think what you'll see when people finally understand that most of the physical that they think is out there is not going to be available because someone else already has it in strong hands, they're going to bid the price of the metal itself up, but also concomitant with that will be a very sharp rise in the best gold and silver mining production and exploration, soon to be producing stocks as well.
And we've also heard rumors that Barrick Gold of Canada, the world's largest gold company, may be in secret talks with China to come up with some kind of deal that isn't connected to the market, so they have a guaranteed price and China has a guaranteed supply.
This is very interesting, and if something like that turns out to be the case, it probably won't be the last as well either, because what the Chinese are doing is looking in all different directions to make sure that they have the supplies of the items that they need, whether it's gold and silver, whether it's oil, whether it's uranium, you name it, they're working on acquiring it, as well as the base metals too, of course.
Well, when you said oil, they had that, $17 billion deal in the Alberta oil sands, and the Canadian government said normally we wouldn't let a deal like that go through, but in this case, China gets a go-home-free card.
Right. Money continues to talk, and if you have the money, you can buy the gold and you can make the rules, and that's what the Chinese are doing. So they're buying literal gold and they're buying figurative gold, as you just discussed, which is oil and other things that have value, including a lot of real estate in the United States, for example, as well.
And, of course, in China, the one-child policy now being ripped up. If you're a Chinese citizen and you invest $300,000 or more in foreign real estate. So that's what they're talking about, snapping up nice parcels of land in the U.S.
Yes, and a lot of this money that they have, in addition to their own debt creation, is involved with the fact that we buy so much from them that we have a massive trade imbalance. So they're using the U.S. dollar to make those purchases to strengthen their own system. We're paying with debt by creating more debt, and they're taking care of debt by buying things that have real value. It's going to be pretty interesting going forward here over the next 5, 10, 15, 20 years.
And, of course, we know the Chinese make plans long-term. They don't look at things on a quarterly basis like North American businesses do. They have 5, 10, 20, 50, 100 years.
Right, and all those little smaller circles go within the larger cycle, which is the very, very long-term view. And I would suggest that that is a real recipe for ultimate success, regardless of the pitfalls that happen in between, because no matter what happens, you keep knowing where it is you want to go, and you keep working toward that, just like a sailor guides himself safely into the harbor by paying attention to the harbor lights.
Should we be more like the Chinese and have companies and governments take a look? I know people made fun of BC Premier Christy Clark for saying, I have a plan 15 years down the road to do this. People laughed and said, well, how do you guarantee that I'm going to be in power then? Well, or you'll be in power. Well, one of the things is that with this plan, she hopes to stay in power.
Well, I think it's important for governments to have long-term plans and stick with them, but I also believe, as a free market individual, I believe that we as individuals ourselves can have long-term plans and stick with them, and we don't need the government to force us to do something or to even give us ideas, because we can move more rapidly than they can, and we're more agile, and more far-sighted in many cases. So I think if the individual challenges him or herself to have a long-term outlook and to work steadily toward those goals, then I think that will create a unique and independent individual that won't need to rely so much on other people and especially the government.
David, if you were trying to plan ahead like the Chinese do, what kind of a strategy would you put in place?
Well, I think in terms of the resource sector stocks, there are probably a lot of our listeners maybe have all the money committed that they want to or are able to a particular stocks, and hopefully they've been ones that they feel are good ones even if they decline. And as Rick Rule once said, even the best stock pickers in this type of a market, every 10 years, the value of their shares goes down by at least 50%. And so what the agile traders do and the ones who are long-term thinkers is they sell the stocks at the low level that they don't think are going to do well, and they put that money into the stocks that they believe will be winners, and then they'll end up in 3 to 5 years with up to 500, 600, 700 times 700% their money. And so if you want to have an outside success, I think you have to take calculated risks. And in this day and age, there is nothing that is risk-free. And indeed, most things have high risk. But I have been adding to my gold and silver mining stocks recently. I've been doing it on a scale-down basis. I did some more today when I bought in prices where they had been at or lower than they were in June. And time will tell if that was a good strategy. And I'm not trying to catch the bottom. It would be great. But I think we're close to it. And even if we make new lows in here, I'm not all that certain that the prices are going to stay down all that long. And I am very certain of one thing, that when these prices turn, whether it's from this level or below where we are now, it's going to be very quick and rapid. And I really believe that when that turn finally comes, with so many people on one side of the boat, that we're going to see a very explosive rally in the mining stocks. And I don't very often make predictions because it's easy to be wrong, and I could be wrong on this one too. But I really believe that the next rally that we see, that is a full-fledged rally in the mining stocks, will be much more powerful and more enduring and go a longer distance than the one we saw in the late June, early July period. And if you remember, some of the mining stocks that we discussed actually went up in value by anywhere from 80 to 150% in just a matter of a few weeks, admittedly from a fairly low level. But the point being, that's where the really big money is made during the blast-off phase when the market finally turns. And I don't know any way other than accepting some risk that you can get aboard these things, because inside knowledge doesn't do it. You just have to be a contrarian, and you have to take calculated risks that make sense for your situation, and then you have to be patient. And I think if a person can do these things, they have an opportunity to do very, very well in one of the most disliked sectors currently that we see. And then they can sell at very large profits when just the opposite is true, where everybody wants in.
Well, we've seen on the equity markets, people have put so much money into high-tech companies, Google, Twitter, that have not made any money. They've got billions now piled up in the bank from their stock sales, but they're still trying to find a way to make money. Well, if you buy a junior mining stock and they're a solid company, and we've had a lot of mergers too this year, or acquisitions, so the number will be smaller. The company probably will be stronger because of that. You have a great opportunity to make money at a low price. If you tag onto a stock that's already over $1,000, what are your odds of actually making a profit beyond that?
That's really true. Some of these, the PE earnings, the price-earnings ratio is skewed to the point where you might take 30, 40 years to get that to come back to you. And so the difference being with the miners, too, is that a lot of their costs are fixed and knowable. And if you have a sharp upward revision in the price of the commodity they sell, that goes immediately to their bottom line. It doesn't take 2 or 3 years to filter through. And so that is where, again, just buying the very, very best of the companies. I have a third of as many companies now as I did in 2008, and sometimes I even winnow that down a little bit more. But the point is to, don't expose yourself to just one geographical location or one type of commodity. For example, I've been buying some uranium shares in a couple of different companies over the last few months, and I think you're going to see a similar turn in the metals that you're seeing now in the uranium, where some of the bigger companies are either turning around in a very obvious fashion on the charts, or simply refusing to decline much further, in spite of what happens to the underlying commodity. And that, to me, is an early warning sign that you might be ready for a big trend reversal. And then when you see that happen on good volume and a very high price movement upwards with a gap in prices, then that really starts confirming that your premise is correct.
David, we're going to keep an eye on this because, as you said, we live in interesting times, and although we talk regularly to people who are market historians, we're into new territory. Nothing has copied exactly what's going on right now.
That's really true. We're in the midst of a paradigm shift, and not just in the metals, but throughout all the different types of activities in our lives. And I really believe that, Jim, even right now as you and I are speaking, I think that over the next few days and weeks, and certainly months, that this is the time frame when we're going to see this big turnaround in the metals that's going to change things in a big way from what we've seen in the last 2.5 to 3 years. So I think the more that people feel like there is no hope, the more they should realize that they're getting very, very close to a 180-degree turn in these things, and they'll look back and they'll wonder how they could have ever felt that way. And hopefully they'll have the courage to hang on to what they feel are the best companies so that they can reap the rewards that they should be able to have from being patient and taking on a fair amount of risk.
Well, I don't think without that little four-letter word, hope, humans would really be around. Thank you very much, David.
You bet.
My guest has been David Smith, Senior Analyst for the Morgan Report. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HowStreet.com. I'm Jim Goddard.